Joining us now from Switzerland, the chair and chief economist for LBV Asset Management, Cornelia Meyer. Cornelia, pardon me. It's good to have you with us today. So when we look at where we saw some of the global reaction, right, overnight here in the United States, but seeing how the global markets were reacting to these tariff deals and the tariffs that are coming next week, it is still unclear what the finer points, frankly, of many of these deals are. But given what we saw in the initial reaction, how much of that do you expect to continue?
I expect to continue a fair bit. And you're absolutely right when you say there's still a lot of uncertainty. I look at a lot of these deals, and we have fantastic deals like with the United Kingdom of 10%, but the details are not worked out. Neither are they worked out with the EU, where you say, okay, there's that much investment, there's that much purchasing of US energy, but it's the private sector has to do that, and these are government-to-government agreements. So we have a lot of uncertainty. It's the devil's in the detail with trade deals. I used to work on trade deals. I can tell you the devil is very much in the detail, and we will see. And there's a lot of uncertainty going down the road, and that will throw us, especially also in terms of markets, the odd curveball or the other.
In terms of that uncertainty, I wonder, there had been, I would say over the last several weeks, maybe in the last couple of months, actually, as we look at the markets, some of the uncertainty felt like it was baked in to a certain extent as we were waiting for these deals. Now that we have at least the broad strokes of some of them, how much do you think, as someone who has dealt in this realm before, how much do you think these deals could actually change? And I bring up as an example Canada, which we saw a swift reaction from the White House on the heels of Canada talking about potentially recognizing a Palestinian state in September. The fact that so many of these deals for this president are blurring the lines between political demands, personal investments in some ways, it gives the opportunity for there to still be a fair amount of wiggle room.
There's a fair amount of wiggle room. And, U.S. President Donald Trump is true to his background. He's a real estate mogul. And when you do real estate deals in New York, you just throw everything in, not just the kitchen sink. You throw the bathtub in. And that's essentially what he has done. But when you do that on a multilateral basis, it becomes much more complex. So I think I wouldn't call it wiggle room. I'd call it uncertainty going down the line, especially when I look at EU, when I look at some of the deals, also some of the ASEAN deals. There's so much that has been promised, but that's really in the purview of the private sector. It's been promised by the government. So it ain't going to be that easy.
There's also, as I mentioned, there have been a lot of concerns and concerns raised over the last number of weeks and months, which in many ways we are waiting for those to materialize. I was struck by some comments that we recently heard from Larry Summers. I just want to play a little bit of what he had to say.
It's more likely than not that we're going to have a recession. And in the context of a recession, we'll see an extra 2 million people be unemployed.
So he's talking about the impact in the U.S. Do you agree with that assessment that a recession is in fact looming along with large numbers of unemployment?
I would agree in the U.S. that what you really need to worry about is inflation. And, looking at President Trump's core base are people who, he promised them I'm getting rid of inflation and bringing jobs back. So that's that. In terms of the recipient countries, the guys who got the tariffs, there may well be a recession when I look at the EU in terms of their modus operandi was cheap energy costs and high labor costs. Now they have high energy costs, high labor costs, plus taxes. Then you look at a small little country like Switzerland, where they now have 39% tariffs with their largest single country trading partner. This will cost them tens of thousands of jobs.
I'm glad you brought that up because it's 39% for Switzerland. Just looking at, we're talking pharmaceuticals are a major export. the fact that you have, in fact, the country's president and finance minister saying that they hadn't been able to reach an agreement, they had this final call, that the trade deficit was still the issue there. What does that raise in terms of questions for you about the way that these deals are actually being done and how those deficits are understood from the U.S. perspective?
Look, for the US, and I have some sympathy for President Trump. He says he doesn't like multilateral frameworks. So the people like the EU, they have some clout. It's the second largest economy together, all these countries in the world. They will spend more on defense, so they have some clout. Even Canada, Mexico, they have some clout because they're so close and it's so important. But smaller countries like the Switzerlands of this world, they don't have that clout. And in that sort of environment, clout matters.
Indeed. Really appreciate you joining us today. It's great to have your perspective, Cornelia. Thank you.
Thank you very much indeed.